prices surged to their highest level in over 3 years last week, and strategists have been marveling that they shot up so quickly. Now they're slumping, and U.S. crude oil futures have dropped by about 10% to trade around $66.50 per barrel. That's down from about $73 last week. Global benchmark Brent crude oil has also dropped by about 6% to trade around $76 after peaking above $80 last week. The sharp decline has been triggered by Saudi Arabia, the world's biggest oil exporter and de facto leader of OPEC. Energy Minister Khalid Al-Falih revealed on Friday that he was in intensive discussions with Russia and other OPEC nations to pump more oil to ease global supply concerns. Well, joining us with some more insight into this is Daniel Ringes. He joins us in Washington. Daniel, welcome to the show. Now, it's quite unusual that all that talk about oil prices climbing past $100 a barrel, it's now turned to concern about the threat rising prices could become to the global economic growth moving forward. What are your thoughts on that, Daniel?
Well, as you know, Che, a while back, Russia joined OPEC to reduce the supplies that they were producing because prices were so low. So they reduced by about 1.8 million barrels a day. Now that prices are beginning to come up, you know, we've got a situation where I think it's natural for the members to start to think about ways in which they can boost their own supply, especially at a time when A, you've had a reduced supply from Venezuela, and B, you have the potential huge loss of supply from Iran dealing with the impacts of the reimposition of US sanctions. So I think it's less about, you know, these OPEC countries and Russia wanting to make sure that the rest of the world doesn't feel the impacts of higher prices, and more about the pressures from internally within these countries for them to frankly make a little bit more money as the oil price has gone up after a period in which they've been pretty patient.
Now, we've essentially seen Saudi Arabia make a policy swerve. It's now announcing that OPEC is likely to boost output in the second half of the year. So what does this mean for oil prices? I mean, we did see them react to this news today.
Well, I think the crucial date for us to consider here is June 22nd, when these energy ministers will meet in Vienna. So Saudi Arabia's put the first sort of proposal on the table up to, we are told, 1 million barrels a day increase. But that's not set in stone. So the relationship with Russia is very important here, because I think the Russians have, you know, put on a little bit of pressure to increase the output. And so, you know, there's also the factor of Iran and the extent to which that will reduce supply. So as the oil price is at the moment, you know, they've factored in the fact that Saudi Arabia's indicated that they will start pumping more, but that's not set in stone. So, you know, this is an interim phase. The money will be put on the table once they make that decision.
Now, of course, we've seen Russia sort of agreeing with Saudi Arabia on this move. But speaking of that meeting in Vienna, are we going to see other OPEC members and certainly other allies on board with this view that the oil price rally has essentially run for long enough?
Well, I think that, as I said, this interesting alignment with Russia and Saudi Arabia, two very, very large producers, has given them a lot more leverage than they had, especially considering the fact that the US has become the biggest player, frankly, in the oil market in recent years, thanks to this shale revolution, as it's called. So this sort of alignment with Russia and Saudi Arabia has provided them with a little bit more influence over the oil markets overall. But there are questions about that. So some of the other OPEC countries may be experiencing a little bit of friction about that relationship. And they will, of course, want to increase their own production to increase their own profits. So there's a lot of tension in the air at the moment about just how this deal will lay itself out. But the bigger problem for these countries is going to be that US production capacity is going to continue to increase, not just production, but also export capacity. At the moment, it's somewhat limited. They don't have enough pipelines or enough ports to be able to ship out as much as they possibly could. So over the next few years, that's going to increase substantially. But in the meantime, I think whilst these oil prices are starting to bubble up, it's time for these producers to want to rake in a little bit more cash while US export capacity is still fairly contained.
Well, many thanks, Daniel, for your insights as always. Daniel Winders joining us there in Washington.